Hello folks, LA Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Hey folks, LA here, weekly report. I don't know if I'm going to go over all the details, but essentially last week, I've been gone for a couple of weeks now, vacation, and what we saw since I've been gone is a mad dash right into equities, and in particular this past week is when we saw it. And if you look at it, right, for the last 3 months we've been consolidating. The S&P just refuses to break down. The index had, the SOXX broke down. Then the mags started to push things back up on earnings, and that's really kind of the story here. Great earnings, mags pushing things higher. Got a big spike last week, and you can see it in the numbers here. Big gains on the week. Magnificent gains actually. You even saw gold spike higher. All these things are covered below. But if you look at it, right, mags were the leaders. I mean, huge, almost 5% if you just take the average weighting. Most of the sectors higher. The XLK was the big one. You can see that here. I mean, the weighting of it is very high, and it was up 7%. And that was what carried the day. Fundamentally, there's a bullish backdrop, right, with the earnings blowouts. I mean, just huge earnings, 50% increase year over year. I mean, that's crazy. Now, if you throw out the Anthropic, right, because you got some unrealized gains in Anthropic, OpenAI from some of these companies, if you throw that out, you're still up like 32% year over year. These are insane numbers. And this is on the back of what has been 6 or 7 quarters now of excellent numbers. You had the employment rate, the employment numbers print negative on Friday. That says, hey, rates probably aren't going to go up. That helped the market again on Friday. Got another peace deal being floated on Iran. Now, this is an interesting one because it looks like Trump is just going to have to eat his cake here, because Iran is really pushing their own agenda, and it looks like he has to eat it. Midterms, they're on the horizon, right? That's probably going to help things. Now, fundamentally, you got risk, and that's Iran. I mean, it's a fluid situation. It could flare back up again. You got the Houthis over in Yemen that could do the same. You got this big thing with the yen and the intervention that's starting to take place. That's kind of a powder keg that could blow. And then you got all this AI. I mean, AI is driving everything. And if you look at the CDSs on ADI, they're blowing out. There's a lot of worries that they're not going to be able to pay back all this debt. And so that itself is a concern. But then again, look at where the market is. Look at what the market's doing. Right now, it just doesn't care. And a lot of times, it just doesn't matter until it matters. Move over to the charts here. Your interest rates trying to pop higher. They're at a level now which is fairly significant. If they do regenerate higher, this is going to be a real problem, because you're like at the top of the chart. I mean, 5% is where it really gets extremely critical. 4.5 was kind of the break point. We're over that now, and they're growing used to it. But if it continues to inch up, and that yen is a big part of this. When they intervened on the yen, they sold euros. They didn't even sell dollars. They didn't want to drive our rates up any higher, and they had to try to keep the yen from discombobulating, because if it did, right, these rates were going up more, because the Japanese probably have to sell their treasuries. So it's like it always is, right? I've told you this many times over the years. It's a bunch of balls in the air, right? One of them starts to fall, then you got to pick it up, throw it back up, keep things in the air. And so you're constantly battling a myriad of problems, right? And taking away from this to give to that to keep everything in the air. And this is just one piece of it. The dollar's another piece of it. You can see the dollar trying to break down. It's got a bullish retest regen going on. Odds are not in its favor to hold on this weekly. And if you go to the monthly, it's regenerating to the downside again. So if the dollar starts to fall, that usually is beneficial for equities. But then again, if it falls fast, that could be a problem. You go to the SOXX. Now, the SOXX is probably the weakest group still, but I don't typically draw trend lines, but if you look at this, right, that's kind of a break, and I'm sure most people see that, and that's what they're trading, because as it came back here to that trend line, they pushed it right back up. You got a nice little hammer type situation here. This looks like it's going to attack this level. And that level to me is kind of the key level, because if you get over that, right, you're probably going to get to this. If you get over that, you're going back to the highs. I had said before, and I still think it's the case, we're going to see it test the top of this swing point lows high. If it gets over it, all bets are off on this thing reversing and going back down. Now, what you will see me say elsewhere in the report is, that this is not trading homogenous anymore, right? There are certain groups of stocks that are trading better than others, and you can look and find that. It did test on the weekly, couldn't break, even though it had higher volumes. Here's some of those things that I was just talking about. Like memory stocks, for example, are sucking air compared to like ASML and TSM. If you go to the mags, right, we knew this group was strong, but look at this just magnificent move high. That's a 10% move in a week on what is the largest companies in the world. That's huge, right? Now, what is it doing? It's consolidating up here. This thing is just consolidating, and it's going to go attack these highs. That looks to be the way it's going to play out. There is a bearish and a bullish retest regen. The odds favor the bearish one breaking. S&P, if you look at the S&P here, that's your breakout, right, on the weekly. If you go to the daily, there's your breakout. What is it doing? It's not coming back. Usually you're going to come back within 2 bars, 1 to 2 bars, and you're going to test that breakout point. It didn't do it. That's telling you it's stronger than expected. It's telling you that more than likely this thing's still going higher. Small caps getting ready to break out themselves, and if you look at the Nasdaq, the NDX, these are ones that are bringing up the rear, but this thing is about to break out of that bearish retest regen. Tested, lighter volume, right? Comes down, bullish retest regen, pops it back up. Looks to me like you're going to get over this and you're going to go after all these swing point highs up here. And if you do, it's probably going to make new highs, and that's generally what does happen, right? And if in fact it does happen, what you're going to see is that divergence that we have now converge, and we're going to have everything on the same page. NDX, well, I've kind of already talked about that. I'll just keep going. Hyperscalers, a lot of expenditures there. That's keeping everything up. Here's your gold charts. Now gold, right? As the dollar drops, gold benefits. Well, you saw the breakouts here of these 2 swing point highs, and then it took out the retest regen. When you're looking for a major turn, and I'll pull up the weekly, you can see here this has been in a decline for a long time, right? That's I think it was about a 33% decline. I'm going off the top of my head here. What does this big spike do? It starts to turn this thing. Now, given that it's been as weak as it has, you might get some back and forth here. And then again, the way this market trades anymore, you may not get much of a pullback. And you can see this big spike up on Friday on those employment numbers. So maybe it runs up into this bearish retest regen to start with, and then you get some sort of a pullback. That would be my guess. If so, this weekly may still hold. In other words, you pop up there and come back. But gold looks like it may be turning the corner, and silver trying to do the exact same thing. And you can kind of see this rounding bottom that's starting to take place in these. Bitcoin could actually pop a little bit more. It's got a situation here where if it gets over this bearish retest regen, the top of this, right, it's probably going to attack those 2 swing point highs. It should try to break them. Now, if it does that, right, if we walk on down here a little bit farther and look at the weekly, then that says that you may make it as high as the top of this high, right, this big breakdown bar. And so I'm not crazy about this chart, but it looks pretty bullish still. And so, if this thing starts to move, gets over the swing point high, you get 2 time frames breaking, that can take you up to this high and potentially take you all the way to that one. So, and that's a lot of points if you're looking at oil doing nothing. World markets on a tear, whether you're doing it developed or both developed and underdeveloped. Sector momentum strong as can be. Look at these gains last week, and I only did the top. I only did double-digit ones. I mean, this list would have been 2 pages if I did all of them at advanced. Just a few of them didn't. Mostly oil. I had a couple trading ideas before I left. There was 5 of them, or 6 of them, I guess. One, all 5 of them pretty much flat. This one went crazy, and here's the chart. What a move! I guess if you spread your money across all 6, you would have made out like a bandit. I pulled a few more names this week, or actually last week, based on the weekly and monthly trading signals, and you can see those here. And if you go in here, really, this looks more bullish than bearish in terms of MTTF. You still got room to run here on the cap weighted stuff. If you go to the index, you're moving into greed here in terms of the fear factor. Crypto slowly making its way higher. And sentiment is about split, which is still pretty bullish, actually. So bottom line here, what's the deal? My take is that we got divergence, and we're probably going to see the Nasdaq, the NDX work their way higher. That's really my take. If you survived this pullback and you didn't get stuck in some of these stocks that had 30, 40, 50, 60% pullbacks, right? You got your portfolio pretty much intact. Now you don't have to swing for the fences, but now you can deploy it in a much safer environment with the odds of the favoring the NDX and Nasdaq to work higher, break it out, and make new highs. So that's where my thoughts are now. Yeah, I know there's a lot of problems. There's always risk, right? But at the same time, the odds look a lot better to go higher than they do to fall back at this point. That's where I'm at. Have a great one. I'll see you next time. Take care.